Alright guys, it's the boy Kingsley. I'm back again to the YouTube platform posting content. It's been a very long time since I posted my last content. It's like 3 months or 4 months ago. Not really certain about the amount of time it was. But this video I'm gonna be telling you guys why I took break on Forex and posting videos on Forex and my journey. That was what my Forex channel was all about. And it's just about that. That's all. It's just why I took a break and how my forex journey is going to be. And this video I'm also going to be telling you what my new strategy is because it's part of what I took break for. All right. So interesting. All right, guys. I've been out for about 4 months, and it's not been very easy because, and the reason for that was I was my piano was really going down, and it was really like I didn't know what I was doing anymore. At a point, it was like I got it right. At a point, it was like I said I didn't get it right anymore. But I still kept on, being consistent and showing up in just trying to always improve every day. And I had to just stop posting content because I didn't really like it. That you're not really. I think you should know what you're doing very well. I knew trading, not I didn't know trading, not I didn't know what I was teaching, but in my own side, I'm not making money. I was more of like a break-even trader. All right, I was more of like a break-even trader, which was not what every it's not what every trader wants. You want to get to that profitable stage. You want to get to that stage where you're able to consistently withdraw money from the market. All right, and then that led me to define what define profitability. It's not about being able to buy Lambos and Rolls Royce and all those things you see all those top traders buy. All right, it's about being not losing money to the market anymore. All right, so we beat you fund $50, which usually that's the kind of amount I just usually I like to fund and I'm willing to lose to the market. $50, $30, $80. I really not actually I've not actually not funded $100 full at once before, but I've been able to maybe fund 80 and then take it to 100 and then trade 100. So it's like I've done this kind of things before, or 50 to 150, just to not to lose your capital to the market anymore. That is the goal. You want to be. That is what I mean, but that's what I believe that is the meaning of profitability, where you're not losing money to the market any longer. So I wasn't really in that stage. I was still losing money, make money, lose money. So I was more of a break-even trader. So I decided, but just to point this out, if you see me looking down here, it's my jotter where I jot out the things I'm about to say. Every content creator knows that. So in case you see me looking down, that is what I'm looking down at. Let's get back to the video. I'll not get distracted. So I had to say to myself, I need to take a break and really go deep in what is really causing my trading to be like this. What is it really? So, and I believe this is what every trader goes through. And guys, it's not easy, man. It's trading is not easy, guys. Like sometimes someone asks me, "Can you teach someone trading?" I say, "Well, I don't advise people to actually do trading. It's just that us we have been trapped already. So really, when I mean trapped, I mean we've already seen, I think, almost all. All right, so that is nothing that really scares us. But if any new become, I'm like, our first advice is not do. But if you're really interested, I can say, okay, yeah, you can go ahead and undo. You can really see how determined you are. So yeah, this video is just me going to be telling you about what my growth throughout the 4 months was, what my new strategy is going to be, and the lessons I learned. All right, that's what this video is going to be about. And let's start from what my growth was all about. And when I left this, when I took a break from Forex, to really, the break was mainly to, see myself, try to grow, just to grow for my growth's sake. All right, I had to go deep into my strategy, and that's when I changed I didn't change my strategy. I really, how I say it, I just um evolved it. All right, I just evolved it, made it much more better. And right now, guys, I cannot tell you my trading is better than ever. Like for the past out of the 4 months, for the past 3 months, my trading has been very okay. I don't lose money to the market any longer. In the terms of not in the terms of I don't lose anymore, but I'm drawing consistently now profits. All right, I'm drawing consistently profits, so I can have a bad week, but in the month I come out profitable. And yeah, I think that is a very good uh, thing you say. And I'm going to tell you guys what I did. And there are usually three things, or should I say two? I think it's three, but let me just go on with just assuming it's two because the other one, I don't really. Well, let's say it's three. It's three, guys. It's three. So the first thing I did actually was to try to see how what is my problem in my strategy. I trade in normal price action, those textbook those textbook definitions you guys see, that's what I actually trade. And yeah, just no trends. I look for a downside. I look for a trend. If it's a downtrend, I look for down, and then I look for the impulsive move. I look for the correction move, and then I want to take the impulsive. All right, simple. I just draw those wedge patterns and those trend lines, counter trend lines, and I want to break and I want to sell. Simple and double top chart patterns, candlestick pattern, support and resistance. Just those textbook definitions. That's what I usually trade. Fibonacci's. I use Fibonacci's. So that's what I trade. Today that's what I trade. But there are two things I added that let me my trading change, and that's what I'm going to. That's what this video is mostly about. Don't get too fed up because we are going to go into the charts, and I'm going to tell you guys what the charts is, what about the charts, and what I look out for in the markets after this part of this video. All right. So the first thing I usually look out for right now is the first thing, sorry, I added to my strategy was liquidity. Guys, liquidity really changed the game for me. Like, it's very crazy. I've known about liquidity quite a while, but what I actually was calling it was stop loss hunt. I knew about it. I knew even that it was also meant liquidity, stop loss hunt, the same thing. But when I implemented it to my trading, it really changed the game for me. Like, guys, it really changed the game for me. And I just found out that all the market does is just sweep liquidity and head to its direction. All market does is sweep liquidity and heads to the direction. So what I usually look out for right now, I look out for liquidity zones, areas, and where are liquidity zones? Liquidity zones are usually found in, we know these things, guys. It's usually found in areas of higher highs, double tops, what again? At support or resistance. I know at places where you definitely knew where I usually definitely keep my stop loss. All right, because that's one of the things I was always hitting stop loss. A market go to my direction. It's one of the problems I had to take a break. All right, I think if you want to be teaching people, you have to know what you're doing first. And right now, guys, I know what I'm doing, and guys, I'm the happiest man alive. There's nothing more than you now know you have some edge in the market. All right, it's nothing that you know that like nothing more happier than in trading that you have an edge. You now know you have an edge, and this from here is to the moon you're going. From here you're heading to the moon. So the first thing I actually did was I implemented liquidity. And what I did actually, because of I could journal, I went back to my trades, look at every trade, look at liquidity, find out that it's mostly the trades I won mostly were the trades I usually took when liquidity was either swept or was about to be swept. Those are two concepts. Is that there's a liquidity run and there's liquidity sweep. All right. I usually like when there's liquidity sweep. When I see a liquidity run is just usually market runs liquidity and just keep going. All right. That's another concept. I'm not going to put that in a video, but liquidity sweep is where market comes, sweeps liquidity, and now head to the other direction. You first takes out those guys at below and then head to the direction. So I started waiting for that. I implemented liquidity. And also, guys, the second thing here is that I started looking at things from a higher time frame perspective. It's really crazy how the higher time frame, I think, especially the 4 hour, I think that is where everything is. Every strategy works very well in the higher time frame. They are much more perfect there than when I usually be always on the 15 minute. All right, I still get to the 15 30 minute, but I'm always like nowadays I'm always on the 4 hour 1 hour. All right, if they come and see me on my charts, usually 4 hour 1 hour I'm looking at 2 hours sometimes. In fact, 4 hour 2 hour 1 hour, those are higher time frames. You barely always see me now always on the 30 minutes, always on the 15 minutes. I'm just there to probably just check out of what is happening below, and yeah, that is just what I do there. So the first thing is that I implemented liquidity to my trading. These are the things that make my trading very my win rates increase. And second thing is I started trading from the higher time frame perspective. Those two things changed the whole game for me. And the third thing that actually I did was I started trading a lot more pairs. Now that's gonna shock you guys, right? That's gonna really shock you guys because I know a lot of our mentors always tell you just focus on one pair, two pair, one session, all those things. It's very funny how see everybody's just different. Alright, everybody's just different. And it's because I started looking at 4 hour, so it gave me room to be able to look at a lot more pairs. Because before I can wait for the 4 hour to do its thing, it takes a lot of time. So let's say GJ could be just be ranging on the 4 hour. I am not even doing anything because my strategy works very well on the trending market. So what I do, I just go to another pair, bro. I can just go to Euro GBP. I look at Euro GBP is having good structures, and I trade Euro GBP. So those three things, I started trading a lot more pairs, and I saw change in my trading. Guys, I'm telling you, I saw change in my trading. I saw my strategy PNL went high. It's really crazy, guys. So yeah, that was it. Those are the three things I did I did my trading, and it really changed my trading for me. So as I'm back with a new type of way of trading, and that's what I'm going to be teaching you guys from now henceforth. All right, that's what I'm going to be teaching you guys from now henceforth. That's the kind of content I'm going to be posting. I'm going to be posting more of my new type of trading. I didn't change my strategy. I just improved it, because it's liquidity that is the thing that changed my strategy. No, I just implemented it. So I now look out for liquidity areas. All right, and I look at the 4 hour time frame. Everything I did before, I just carried them, started doing them in the higher time frame. I started doing those Fibonacci's in the higher time frame. I started doing those support and resistance in the higher time frame, and it makes a lot of more sense. I'm going to show you guys in the on the charts what it looks like. All right, and right now I'm just using my camera. So once I'm done with this part of the video, I'm going to get into the chart and show you guys what I actually do and how I do it on the chart. All right, so guys, I think that is it. And another thing also was about another thing I also did, which one is more of a psychology area, was to be more patient. Because to be trading on the 4 hours, I mean, it will need to be a lot more patient, guys. You need to be a lot more patient, and you need to have emotional control. I had to do with all of them. I sat down and I said, guy, you want to make it in this thing, you have to do with all these things. All those FOMO, guys, I don't really FOMO anymore, guys. Like, I'm so happy. I'm telling you, I just sat down on Friday. I sat down and the market was doing, you know how the candles will just be going like making you you want to leave. It's just these candles were really like they're demons, guys. They're demons. They make you think that you. So right now you see me. Once I see those things, I'm just chill. I'm chill. I'm chill, like guys. I'm really chill. So guys, I had to be a lot more patient, and I had to be a lot more had have a very good emotional control. All right, and that's it. That's what will change my trading. So guys, that is it, and I'm back fully to the YouTube platform. From now, I'm gonna be posting a lot more on YouTube, as I used to do every week. I'm gonna be posting every week. I want to be doing every day, but I don't really have time to be doing every day. Not every day, maybe more than once a week, but I don't really have time to be doing that. Man, to actually I said to have time, but I think I'll prefer just doing once a week. All right, I prefer just do, but I'll try to make it more than once a week. All right, guys. So let's get into the video and let's get into the charts, and I'll show you guys my new way of trading and how I do it, guys. So this is also what I just want to put out there first. I'm back fully to the YouTube platform. I'm super excited, and I hope you're super excited. So see you guys on the chart. Peace out
All
for
right,
now.
guys, we are on the chart, and what we're going to be doing, what I'm going to be solely doing here is actually showing you guys what my trading looks like right now. And yeah, it's not pretty much different. It's not different from what I'm trading, but it's just improved. All right, improved in the sense, as I said earlier on, is time frame wise, and I added a little bit of confluences. Not confluence, yeah, it's also part of confluences, but mostly um, mostly the time frame wise, and then the little bit of strategy and little thing I added, which is that I added liquidity. So I'll still go to, let me go to a fresh chart. So I'll check, this is the chart I still on recording. So let me go to which pair. Let's just go to silver. I don't trade silver though. And here's another lesson tool I learned, guys. And because now I trade on the higher time frame, I usually, because now I trade on the higher time frame, I am now trading. I trade a lot of instruments now, and it really also helped in my trading. Now, now a lot of people be like, what do you mean? We've always been said trade one pair, trade two pair, trade max three pair, focus on one pair, master the pair. That's what every of our mentors used to say. But man, guys, listen, not everybody must trade the same thing and they trade the same way. Especially now, I'm mostly on the higher time frame, and I'll take my confluences from the higher time frame. I now mostly look at a lot of pairs. It's not saying I'm trading all of them at the same time, but I'm monitoring them. The keyword here is monitoring. I'm monitoring them. All right. So right now I'm monitoring them. So now these are, you can see all these pairs here. It's not as if I'm trading all at the same time. You find that they are mostly, all these pairs are pairs that move. This is what I look at. They move very well. First of all, they need to be actually, the first thing first that makes, I've said this in my earlier videos, the first thing that make me be take a pair is that it moves. One, I want it to be a pair that moves and obey structures. All right, so those textbook examples you see, I want the pair to always expect to respect those kind of structures. All right. So like, let's go to my strategy. So that's the thing. I just want to put it on there. I trade a lot more pairs because what I've experienced in the last 2 months was it gave me a lot more opportunities, clearer opportunities. The keyword here is clearer. It gave me clearer opportunities because now I'm trading from the higher time frame. All right. So you see me most on the 4 hour, on the 2 hour. You can see me occasionally on the 15 minute, but that's just to monitor what's going on in between. But mostly I'm waiting for the 4 hour candle close and 4 hour candle confirmations. All right, so yeah, let's go to what my strategy looks like. So this is silver trade, and I'm going to clear everything. I don't trade silver, not even I don't really trade silver. Remove all the indicators. So what I do definitely is the same thing. I come to the weekly time frame first, weekly time frame, and I plot key levels. But here you can see that there's really no key levels plot. Market is in the highest. I think this is the highest silver has gone into. Oh whoa, this is not the highest. Wow, as at 2011, silver actually reached this high. Interesting. But gold is in its highest. And I just assumed that gold was like silver and gold. No, they are in the same. They usually move alike. Not alike. They are kind of like silver and gold. That's the thing people always say, silver and gold. Yeah, that is it. So yeah. So first thing I do first. This is the first thing I do. I come to the weekly time frame, and I said it in my previous videos. This show you that I have not changed a lot. Just improved in them. All right. So I still trade the normal double tops, but now there are kind of double tops that I see and I don't trade. I still trade the normal chart patterns, the wedge, and all those things that you see on the textbook. But now this is how I go about it. All right. So first thing first, I still use my tools. This is my weekly. I plot key levels here, but this one is really not important to plot key levels because it's very clear. You can see it's very uptrend, so there's really no need. But this is how I go about it. I first plot key levels on the month, on the weekly time frame. If I'm not really understanding what is going on, I'll just scale it up to the monthly to really understand. So you can see that this is a key levels. Remember, I've said what key levels are. All right, places that market reacted to, but this time around is going to be for the weekly time frame only. So you can see one first touch and the second touch. You can see the first touch here and the second touch here. All right, that is a good key level. That means it's a strong level in the weekly. Imagine this happening on the weekly. That shows that this is a very strong level. And then the next thing I do is I'll just copy, just clone it, and this is another level that you can see that held. All right, this is a good level. You can see held here and held here. This is a strong one, so we're just going to drag this to the future. Bam. Let's improve it. Yep, exactly. So you see that so I think the rest is not really important. Market is too far away from here, and this is on the weekly, so it's really not important. So next thing we do is that we come to the daily time frame. It's on the daily time frame that we would also plot daily key levels. All right, because we have weekly key levels and we have daily key levels, and also the 4 hour. Those are the three places I usually plot key levels. The rest I just always minor ones just to be able to know what is going on here and what is going on. The main ones I come in first thing is plot key levels. First we plot key levels. Second we look at what the trend is. So first thing we plot key levels. So that's what we are doing now. We've plotted the weekly. So next thing we do is we go to the daily time frame, and on the daily time frame is where we plot daily key levels. And I have a different tool for this. I do this so that when I don't need to always be going to the weekly and know what level we're at, by just the color I know, oh, this is the level we're at. So what I use this one here for my daily level. You can see it's a brown color. It's a brown color. If I'm having difficulty, I'll just scale up to the higher time frame and see what is going on. So you can see this place has held for a very longest of the time. You can see this place has held for the very longest of the time, and it's a very good key level for the daily. There's no other daily key level I can see here. This is what I do on every time frame, guys. I've said this already in my previous videos, but this is what I trade, how I trade now. So first thing, we plot key levels, and that's what we are plotting. So we have plotted key levels on the weekly and on the daily, in which the same way I've been trading. The next thing we do is to what is the trend. Now the trend is very clear, uptrend. This is textbook confirmation. You can see market is printing higher highs and higher lows, and then just keep going and keep going. On the daily, you can see the same thing. We are on an uptrend. Market is printing higher highs and higher lows, and we just keep going and keep going. Now the next thing I'll do is to check out what the 4 hour is also saying. All right, check out what the 4 hour is also saying. So now on the 4 hour, we can see that the 4 hour is also in an uptrend. Now this is where the next the thing that I implemented newly comes in, which is liquidity. Let me write it out here first so you guys can be seeing it very clearly. Liquidity. All right, so now liquidity. This is a very big function in my trading right now. Like it just came and took away all other it took away uh, all other styles or strategy. Like not much stick on the rich styles, but it just like improved all of them. So now first thing we look out for is the trend, is a market. We look out for uh, uh, key levels. We plot key levels, then we look out for the trend. Now we see that market is in an uptrend. The next thing we look at is available liquidity. One, we want to see listen, we want to see one if market has taken liquidity or if market is about taking liquidity. Because what phase that we are in all of those two, whether it has taken it or whether it's about to take it, will determine how we are going to approach the market. Now, how we approach when it has taken it is what I'm going to show you on this go now. Now, because Amika just came to the daily time frame, I saw liquidity that has been taken. I saw a place that liquidity has been taken. All right. So let's go to the weekly. Mika came to weekly. I saw a place that liquidity has been taken. My trading before, I'll see this higher high, higher low, higher high, higher low, and equal highs. I'll be like, oh, I think the market is struggling to break structure to the upside, and I'll term this a downtrend. But never did I know at that time there's something called liquidity. Whereby for the market to keep going in that direction, it has to take liquidity first. Now we see this thing here. This is the market comes break here. I will assume that the trend has changed. But this is just liquidity being taken out. This is just pure liquidity being taken out. This is what I like to use to mark our liquidity levels. I just give this dollar sign. That is a liquidity level for me. All right. This is a liquidity level for me. I plot this out and this becomes a liquidity level. So first, we see that market is broken, is breaking structures to the upside. Then we have this all of a sudden push to the downside. Takes out this low. You would think like, oh, it's a changing trend, and then you see this massive candle, and then it just keeps riding up to the side. That is what changed the whole trading. So now I have seen that this has happened on the weekly. I know that market is going to run pips above. This is what changed my trading. Liquidity. And how do you spot liquidity? They are under support and resistance. They are also at double tops and double bottoms, head and shoulders. They're also at resistance support levels. There's also trendline liquidity. There are various types of liquidity or places where liquidity can be found. There's trendline liquidity, there is support and resistance liquidity, there is higher highs and higher lows liquidity. So now this one is called a liquidity grab, where it comes back, grab it and go. There's something called liquidity run, the ones that takes off like this, because this area is also an area of liquidity, because there'll be orders sitting down here. There'll be orders sitting down here. There's going to be a lot of orders sitting down here, and this is what we call a liquidity run. Market comes, run all this liquidity, takes all of them and keep heading high. This is called a liquidity grab. Market comes down because it's already in a certain direction. It comes down, grab the available liquidity down, and then people, because a lot of people's stops are going to be here, a lot of people orders are going to be here, grabs them and head to the upside. This thing is what changed my trading. Now I do this very well on the high time. You can see I'm looking at it from the weekly. There's also the daily and there's also the 4 hour one. Alright, but when I'm seeing that the weekly has grabbed liquidity, believe me, the market is going to just keep going up. What you now start looking for is maybe available liquidity grabs on the lower time frame, but believe me, from there and then entries, maybe from there it's heading up. So when I've seen it on a higher time frame, you can see it also happened here. Look at this side now. You can see that it also happened in this level. Market pulls up, pulls down, pulls up, couldn't break here. Now breaks down, you're like, oh, double top, oh, reversal pattern. Then you just see it right all this up. Very much works all the time, guys. Works all the time. Works all the time. I figured out that I backtested it and it works all the time. It mostly never always fails. Look at this now. This is a down one now. Market. This is an example. Market pulls down. All right, breaking structures to the upside, to the downside. See, then all of a sudden we have this massive break to the upside. Takes liquidity. This is God grab. You can see it's in a certain direction. Then goes up, break. A lot of people think, oh, it's a trend change. Then next thing you see, runs all the way down. See it here again. Let's clear this now. It happens all the time. Check it out. Check it out. Check it out, guys. Market is going up, breaking structures to the upside. All right. Then all of a sudden we have this downside, and then we see market rally up to the upside. Happens all the time. Maybe I figured this out. I backtested it, and I was saying, "Damn, guys, this is really real." I used to hear about liquidity, but I always thought, not that I always thought, but I didn't really was interested in it. But liquidity, believe me, it works a lot of time. So I implemented that, and my trading started getting it. I implemented that. This is what I noticed. Making I saw myself had making consistent wins. What I just sat down and said, okay, what are you doing? I was trading a lot more pairs that was giving me clear opportunities, such that I will not be on gold and I'll just be seeing minor B plus setup, and I'll be like, oh yeah, it's gonna work, it's gonna go, I'll take it and it's gonna hit stop loss. But now clearer opportunities on the higher time frame. A higher time frame is the keyword here. On the higher time frame, and then liquidity grabs. Clearer ones in the trading market. Okay, guys, I just want to put this out. My strategy mostly works in the trading market. So if you want to trade this style, it works very well on the trading market. Very well. Now on the ranging market, what I used to do, I always be much careful, very careful. Sometimes I will not even trade. That's why you see me trading a lot more pairs, because some it's not possible that all the pairs are ranging. Some will be trending, and I'll trade the ones that are trending. Because right now a lot of these pairs are ranging, but some are trending. All right. Now let's go to Euro USD. Something very nice that happened. Something very clean that happened. Same thing happened on USD. We see market. Let me make this very large. We see market in an uptrend. All right. We see market going. Where is it? All right. We see market going high, low, high. This is on the daily time frame. High, low, high, low, then fails to break another high. Then we see all this massive move to the downside. This is liquidity grab. I marked it already. Believe me, this market from here is heading to the upside. Euro USD is heading to the upside. It has taken the available liquidity and it's heading to the upside, above and above and above. This is so the same thing I showed you on silver. So guys, this is what I noticed, and it really changed my trading. That's what I'm really emphasizing on, is liquidity. This is a liquidity grab. There's a liquidity run, because now there's available liquidity that's going to be up here. There's available liquidity up here. The market is not going to come run them and fake them to the upside. So guys, Euro USD to the moon. Euro USD to the moon. So guys, this is what I mostly added to my strategy. And let's go back to silver, so as not to scale away from what we are talking about. Let's go back to silver. Let's go back to silver. I'm really excited, really excited. So now we've plotted first thing key levels, second thing what is the trend. First thing we plot key levels, just to know levels that are strong and levels that are not strong. We plot them on the weekly, on the daily, and on the 4 hour. All right, so we've plotted the daily one, and I use different tools for them. Just maybe they say you can be the same but just make them different colors so I can be aware. Because before, what I used to do is I'll be on the 15 minute or 30 minute, and I'll be on a key week on a weekly key level, and I'll try to be I'll be panicking over any key level of the weekly. But meanwhile, it's not really necessary to be trading a lower time frame, by, because at the end of the day, on the end of the week, it could just be a week it's going to do. All right, so weekly levels is for weekly time frame. Weekly key levels is for weekly time frame. All right, we use it on the weekly. Daily, we use on the daily. It's the 4 hour one that we can use within the day, because we can find a lot of 4 hours candles within the day. All right, so now let's go to the 4 hour time frame. So in the 4 hour time frame, is there any key level, a level that market has tested a lot more times? I'm not seeing really clearly, but I think I see something here. I think I see something here where the market has really held a lot more times, a lot more of times. Whereby if market broke here, oh god, this is a very this strategy is really nice, guys. This will be a very good setup. As market broke up above here and closed, I'll probably keep it. See why I use the highest average now, and I'll target here. This is what I'll target. My strategy works very well on the trending market. This thing now is a liquidity grab. Market just came here, grab liquidity, and head to the upside. This place now, liquidity, and the market will keep heading up. But now there's no entry at all, and we cannot be selling because the market is really an uptrend. Everything is telling us up, up, up. So it's going to be a taboo for us to sell. This place is available liquidity the market has taken. All right. So once we see that the market has, what I actually prefer to see is the market has taken the available liquidity. I like to see take liquidity, not wanting to actually take liquidity. That's why I mentioned you guys that first one is market taking liquidity or is about to take. I actually like the one that's actually taking. So the strategy that concerns the one that is about to take, I'll make that for another video. And also as not to make this video very long. So guys, this is how I usually trade. Now that is now for the high time frame. Now you'll be asking me because the next thing is, so how do you choose to enter a trade or not? Now this is where the lower time frame comes in. Mostly it's on those on the 4 hour or the 2 hour time frame. Let's head to the 2 hour time frame. Now my entry is still the same as before. I look for engulfing candles, is that candlesticks pattern or chart patterns. Chart patterns like mostly the double tops and the wedges. I love the wedges. Double tops now are not always working that much. They mostly always be areas of liquidity, but the wedge is still working very well. Head and shoulders, not really much. I'm mostly very dominant and respectful on the higher time frame. But the chart for the candlesticks pattern, what I mostly always use is the engulfing candles and the pin bars and morning stars. Yeah, those three. Engulfing, pin bars, and morning stars. That is majorly what I always use for my entry. So once market now gets to those key levels, as I said, on the daily, on the 4 hour, that's what I'm looking for on the lower time frame. In alignment with the trend. In alignment with the trend. So in this case right now, as you can see, as market has taken this available liquidity, so liquidity is also a concept for my entry too. All right, it's very important for me to use it on my daily time frame, but it's not always too much very important for me to use it as my entry time frame. If I've seen it on a daily, what I'm looking for is the normal chart patterns, the normal candlestick pattern in the key level to trade out from. We want key levels. Now guys, I really don't use trend line that much again because trend lines have tend to always failed me a lot of times, and so has the Fibonacci. I can use them occasionally, but they are not the major, they are no more the major source of my entry or my criteria to get into a trade. I just use them as extra conferences, being that I've seen already the main things I want to see. Those ones are just seen as extra conferences. All right, same as the psychological level. So right now, that's the new thing, and that's the new way I trade. I trade first thing is we need to see key levels. We plot them out. Second thing, the trend. The third thing, we need to see that market has taken liquidity on the higher time frame. And the fourth thing is that we try to enter from those key levels, which is this key level support and resistance. This is simply support and resistance. So we trade the break or the retest and then push to the upside. All right, so this is now how we trade. So now next thing we look out for is to trade out of those key levels. So we check on the 4 hour time frame. We've seen that there's a very good key level here. Market have tested here first time, second time, and the third time. Now it broke it, and then because normally we would not like to trade the break because we are against the trend. We'd like to trade above it. So now definitely this way I would have loved to enter this trade as we had that engulfing. All right, and I'll keep my stops around here and I'll target this other area which will be giving me, anyway I will not target that because once it's giving me 1 to 3 I'll be okay with that. So this is exactly how my trade would have looked like, and I've just taken out. Another thing I noticed guys is on the 4 hour time frame there is something like this. Where is that too? I'm looking for the drawing tool right now. Drawing tool, please appear. Where is the drawing tool? Drawing tool. Is this one? All right. Okay. All right. So we've gotten the drawing tool. Let's make it bigger. All right. So there's something I noticed on the 4 hour, and this is what I want to tell you guys. When we reach a support and resistance zone or a key level, sometimes we see this move that's kind of like round like this, Or sometimes we see this one. There's someone like this. This is what I've noticed. The ones that has this huge such of pattern mostly always hold than the ones that have this V pattern. You can see it here. Market came here, gave this U pattern, and head back up. Because wait a minute. Because one thing you should notice is that on the 4-hour time frame, what this means is that on this level here, excuse me, let me clear this. On this level now, this what this means is market has spent after making the last low, market has spent here 1, 2, 3, 4, 5, 6 4-hour candles. That is a long time. That is more than a day. And then we had this engulfing. This is the right time to enter. So look out for those ones that are usually this U-shaped. That means that the market has spent there for a lot of times before actually now heading down. Those ones are much more authentic, and this is what I've changed my trading. Look for those U patterns, 4-hour candles, formations. All right. So guys, this is pretty much what I trade, how I trade now, and I'll keep on giving you guys updates from now on. I'm going to keep on posting content weekly basis, and I wish you guys to like and subscribe and comment. A lot of I'll be saying comments. I want you guys to tell me what you want, and I'll keep on making sure to make video weekly. I'm back again to the YouTube platform on my forex journey, and thank you very much. And peace out, guys. So this is how my strategy has been like. Simple. We look for the key levels on the higher time frames. We look for the trend, and we like to look for liquidity. Liquidity is a key factor right now. And once we have seen liquidity, then we come and trade out of those zones on the 4-hour time frame most times, looking for this U-shaped pattern curve and with the engulfing. Or we don't look for the V1s. The V1s usually don't tend to oversold, and they always also don't tend to always give you opportunity to even enter. Just look at this. This is U-shaped pattern. We hop in. It's the same thing. It happens all the time. So thank you very much, guys, for staying up to this moment, and peace out. It's boy Kingsley. See you next time.